What's up everyone, it's Karthik with MoneyVest. So welcome on board for our Market Open live stream. So if my audio and video is good, just give me a thumbs up. I just want to make sure that the audio and video is working well. And today is the day. Happens every month. We've got the CPI numbers coming out in under 30 minutes. So if you guys can see me and hear me, just give me a thumbs up. Just want to make sure that everything is working well. Nvidia is flat. Tesla is up over 1.2% Eastern right now in New York. The event's going to take place at 10 p.m. Eastern in Los Angeles. So yes, we just got 14 hours until the Tesla Robotaxi event, 30 minutes until inflation numbers, and QQQs are flat, and S&P 500 also very, very flat right now. So welcome on board, everyone. We've got a poll going on right now for what you think or believe the CPI numbers, the core CPI numbers are going to be for the numbers that are coming out in 30 minutes here. So right now for inflation, excluding for food and energy on a year-over-year basis, expected to be at 3.2%. So that's the consensus, 3.2%. So in our poll, we've got three options, whether you're expecting core CPI to be above 3.2, below 3.2, or at 3.2%. So do me a favor, share this live stream with your friends, family, other traders, investors that can benefit from the info. And we're going to be taking a look at the market's live reaction to CPI numbers. Again, coming out in about 25 minutes. We're going to be ready to take a look at yet another print on inflation. It's been coming down, so that's good. It's come down from about 3.7, 3.8%. down to 2.5%. That's where we are for headline inflation. And of course, core CPI has been stabilizing a little bit, still well above 3.2%, so still well above the Fed's target. However, it has been stagnating sideways more or less. It's been coming down. There's been some disinflation, but of course, it's been moving at a very, very slow pace. So hope you all are ready for these very, very important numbers. And yes, refresh so that it's going to work well. The live stream should work just fine. And yeah, we are ready to take a look at these numbers together. Markets, of course, have been a little bit more back and forth here. So QQQs are up over 79 basis points from yesterday. The S&P also up over 70 basis points. This week, the S&P 500 is up over 73 basis points. And the QQQs, the NASDAQ 100, is up over 1.2%. So the tech rally is continuing to get some steam, and we're seeing a lot of momentum for technology, for Max 7, so to speak, of course, because if you come over to the market concentration, it's really the Magnificent 7 that kind of led this rally higher, with the top 10 going up over 44 basis points or $83 billion. And of course, the big gainer was Apple, Amazon, Broadcom, Microsoft, Oracle. In the last couple days here, Nvidia has been a big leader, pushing up over 3 to 4%. Palantir has been just absolutely crushing it, up another 4% yesterday, going up to over $43, up over $4 billion. And the day before, it was up $6 billion. So $10 billion inflows for Palantir in a span of 2 days, which has been a lot of momentum. I also shared a trade idea on Celsius in our Discord as a cash secured put. My cash had not cleared, and as a result, I wasn't able to take that trade. However, I did share this trade with all the members in our community, considering how much it's been selling off. It was down over 70%, coming down to a very strong area of support, and of course, incredibly oversold as well. So rallied over 6% yesterday, up another 5% pre-market today. And the bond market continues to roll over, down another 0.5% yesterday, down 17 basis points at the moment, as the 10-year treasuries continue to make their way closer and closer to 4.1%. We were almost at 4.1% for the 10-year treasuries, getting up to 4.096. So a lot of momentum coming in for the 10-year treasuries, and crude oil sitting at just over $74 per barrel as well. Folks, do me a favor, share this live stream with your friends, family, other traders, investors in other groups. I've shared the link, copy and paste it so we can have more and more people join us for the CPI numbers that are going to be very, very important for the market. And more importantly, it's going to really dictate how many rate cuts can we expect from the Federal Reserve moving forward, because this is really what's going to decide this, as well as the labor market situation, the economic growth, what's going to be the the path moving forward when it comes to interest rates. Are we going to see more cuts, stagnant rates where they are, or are we going to see a potential pivot once again from the Fed, and again getting rates higher once again, if inflation, of course, doesn't come down fast enough. Now, we already know what the expectations are. You can also find them on our website on market calendar. So economic calendar, you remove for some low and medium impact items. So this right here is the numbers. Of course, we broke down the FOMC minutes yesterday at 2 p.m. Eastern, but today we've got the inflation numbers. And then also, if you take a look at True Inflation's data, right? So True Inflation is an open source website that tracks apparently the true inflation in the United States on a year-over-year basis. So the U.S. government reported rate is 2.5. So that is where we are for headline inflation. So inflation rate year-over-year, we're sitting at 2.5. But according to Trueflation, we are already at the Fed's target on a headline basis at 2.01%. However, we are moving back higher since the middle of September, especially a big spike coming into October as oil prices have been higher. Oil prices are up in the month of October. They're still, I think, up close to 8-9%. So 8.5% is how much they're up in the month of October. September, of course, we're still down over 7%. So that is really what we're going to see in this print that we're going to get in about 20 minutes or so. So hope you all are doing great. This is it. This is, one of the most important events for the market. And market reacts pretty violently when these numbers are released. And we'll see what kind of reaction we can get from the markets. And really the next 30 days are very, very critical for the markets, because starting with today, we've got inflation. And then tomorrow we've got earnings. So earnings season's getting started, starting tomorrow, because we got banks. Delta already reported, Domino's reported. So it looks like Delta, $15.6 billion in revenues, $1.50 in earnings per share. Domino's coming in at just over $1 billion in revenues, $4.19 in earnings per share. And Progressive is going to be reporting after the bell, with big banks getting us started with the third quarter 24 earnings, with JP Morgan reporting tomorrow. Expectations are for $42 billion in revenue and just over $4 in earnings per share. So we got CPI today, PPI tomorrow, earnings getting started tomorrow, and not to mention the Tesla robotaxi event, which is going to happen in 14 hours, so at around 10 p.m. Eastern. And then, of course, we got the FOMC meeting on November 7th, elections on November 5th, and October seasonality is going to be in full swing as well. So we've got lots of data coming out in the market. So make sure that you drop a like. We're at 18 likes right now. Drop a like, subscribe to the channel if you haven't already. I would really appreciate that. And also share this live stream in other groups and other places where you can share with other friends, family, traders, investors that can benefit from this information. So live CPI coming out in about 18 minutes right now. And of course, Tesla here, the big day, up 1%, and did a video earlier on Tesla as well. So make sure that you do check that out. And again, if you have any questions, please feel free to reach out. Please feel free to let me know in the comments if you have any questions related to inflation, economic conditions, recession probabilities, soft landing, hard landing. As you know, the Bank of America is now pricing in for 40 to 45% probability for a soft landing in the US, with about a 20 to 25% probability for a hard landing in the US. And as we already know, a hard landing, which is going to be accompanied with a recession, obviously means that the markets are going to be in a bit of a trouble, versus if we are going to see a soft landing, meaning without a recession, the markets obviously tend to perform much better during these rate cutting cycles. We've talked about this in our previous updates quite a few times. So this is it. October 10th at around 8:30 a.m. Eastern. We've got the CPI numbers coming out for the month of September, and expectations are pegged at 0.1% increase month over month, 0.2% for core inflation, and headline year over year coming down to 2.3%, and ex-food and energy at 3.2% as well. So Coder says, surely this market just needs any catalyst to dip. Yes, so what's really interesting is that we've got a market where volatility is elevated. So we've got a market where the VIX is back up to almost 21, and yet the markets are also at an all-time high. The last time the VIX was at these levels, the markets were down 4.5%, closer to 5% from their all-time highs. So that in itself is actually quite an interesting dynamic in this market, where we've got the VIX at the same level from back in the first week of September, and yet the markets are in a completely different place. First week of September, down 4.5%. First week of October, and pretty much where we are now, at all-time highs. So if we are trading in an environment where volatility is elevated, it is elevated, and any potential reason for the markets to drop, there is, there could be some weakness in the markets. And that's exactly why I think it's important to keep cash on the sidelines a little bit, at least, 15, 20%, 25%, whatever works for you, depending on the liquidity framework that you're following, and then deploying that capital into the market to take advantage of those dips, those buying opportunities. Because as we've talked about this before, long term, I'm very optimistic about the markets and where we're headed. And it's really just those short-term pullbacks and corrections where buying into that fear, buying into that panic is what makes all the difference over the long-term success of your investing journey. So that really is going to be the name of the game. Any type of weakness, any type of red in the market just presents a good buying opportunity for us. Julia says, morning, I need a dip. Demar says, data has been coming in good. Not expecting much of a change. Yes. So I think September data is still going to be coming in good, because we did still have oil prices coming down over 7.5%, almost 8%. But starting October, I think things could get a little bit more dicey, because, crude oil is up on those Middle East tensions. Had a little bit of that supply chain issue from the union strike. So once we get the inflation report for October that we're going to get in November, I think things can be a little bit more uncertain with regards to where inflation is truly headed. And especially when you've got rate cuts now in full swing. So I think October 18th is when we're going to complete one full month of 50 basis point rate cuts. However, rates are moving back higher. So we've got the 10-year treasuries moving back up to almost 4.1. Mortgage rates, auto loans. It's actually quite interesting that they are actually on the way back up right now as 10-year treasuries continue to go up, right? So that could be markets way of telling us, again, the yields have been front running the Fed for a long time, that inflation may not be coming down as fast as what many people believe it to be, and especially what FOMC members, believe that inflation is indeed coming down. It may not be the case, especially when you are cutting rates so aggressively. So, these reports are going to become more and more important as time goes on, because eventually what's going to happen is that we're going to have our answers. The market's going to have an answer whether we are going into a recession or whether we're getting a soft landing. It's all really coming down to the final segment, which is rate cuts have started, economic conditions have stabilized, the balance of risk has gotten better. We're hitting that equilibrium on the unemployment market. Basically, JOLTS versus unemployed persons is close to 1, so 1.07 and 1.1. That's where we were the last time. So there's a lot of things that are now kind of hitting their final legs, right? And eventually we're going to find out if there's going to be an impact on economic growth. And I've also talked about the Buffett indicator yesterday, where we are now coming up to over 200%, right? The stock market valuation versus GDP. That, of course, is a huge indicator for us to also look at from a valuation perspective. So Dario says, do you think Palantir will continue to go up? That's a great question. I think Palantir's valuation is extremely stretched, to say the least. However, my target was $40 by the end of this year, and we have now surpassed that target at 43. So, while there is a lot of momentum, there's a lot of bullishness, there's a lot of technicals coming in for Palantir. Pretty much, next all-time high is going to be $45, and I do think that Palantir could take out the all-time high this year. We got a couple more months left, 2.5 months left, and I believe that Palantir has the potential to take out its all-time high. However, I'd be extremely careful at these levels. So for anybody who's been trading or investing in Palantir, what I'm personally doing, since I do have Palantir shares, is that I'm not really buying at these levels, not even touching it at these levels, because you let a stock run, let the stock do its thing. Buying it at $43 when a valuation is now almost approaching about $100 billion is crazy, right? It's just straight up crazy, because you've got a company that's doing $2 billion, if that, in revenue, 2.2 billion. And so if you do the math, 100 divided by 2.2, you've got a price to sales of 45. A 45 price to sales. That's insane, right? That's insane. And if you do 1,000 divided by 209, you've got a price to earnings. No, that's actually going to be 10,000 divided by 209. You've got a price to earnings multiple of over 91, almost 100. So again, those are some pretty insane valuations, right? So very, very, very stretched right now for Palantir. So valuation's extremely high. So this is a company where if you've got shares, great. Just hold on for the long term, depending on your time horizon and your conviction level. But buying at these levels would just be crazy. It would just be paying a huge premium to what its true valuation is. And so for those reasons, I think now it's gotten to a point where it is trading strictly on momentum and a lot of hype, because there's a lot of coverage on Palantir. There's been a lot of institutional involvement, especially after the S&P 500 inclusion. So Palantir is kind of like this new hot name that's now just getting a lot of momentum, getting a lot of liquidity. And there's just a sense of euphoria and greed in this name right now, because every day it's going up 3-4%. And I would say, like, ever since it crossed over $30, it has really been trading at a premium. It just depends on what degree of that premium it's trading on. But yes, it's gotten up to a point where very expensive. So resistance next is going to be $45, and this right here is going to be that medium term support at $40. And of course, lower levels down in the $29, $30 are also going to be some areas of support to watch for this stock. So we've got 10 more minutes until inflation numbers are coming out, everybody. Do me a favor and definitely share this live stream with your friends, family, other traders, investors that can join us, and take a look at markets reaction live to what that CPI print is going to be. We'll also take a look at interest rate expectations and how they change. Pre-market QQQs are flat, S&P's flat. We're just waiting for these numbers that are coming out in about 9 minutes. 9 minutes, we're going to get the CPI numbers, and do participate on our poll. So we got 171 votes. I want to see at least 500 votes by the time CPI numbers come out. So 32% are expecting greater than 3.2% for core CPI. 38% are for at CPI at 3.2% for core, and 32% are for below than 3.2. So we're kind of very mixed here. We're pretty much about as split as it can be. A third for each category right now for CPI. David, you made an amazing call with CELH yesterday, Karthik. My CSP is up 56% already. That's incredible, man. Congratulations. It's probably going to be up more than that after the market's open, because Celsius is up another 5% pre-market. So I'm assuming it's going to be up more than 56%. You may be able to close out your put for 75-80% profit today, because it's up another close to 6% right now. But yes, congratulations. I wasn't able to take the trade because my cash had not cleared yet on Charles Schwab. They take about 3 days for it to settle. It gives you an immediate buying power for stocks, but for options, you gotta wait 3 days until the cash clears. And since I made a deposit on Friday, so Monday, Tuesday, Wednesday, it took 3 days to clear, and today I think it's going to be available for me to trade with. So, but now it's already moved up. It's already moved up 11% since we talked about it on our Discord. So, we mentioned this, but that was the whole point, right? Just because I can't take the trade doesn't mean that you have to wait as well. So that's why I wanted to post that on our Discord as well. Okay, let's take a look here. So people are onto the fact that this is a real AI company with a moat. Not buying either. Already turned into 80% of my long-term portfolio. That's incredible. Congratulations on Palantir. Julia says, don't you think that the entire market is like Palantir? Good idea to short Palantir. So Martin, be very careful with when you are shorting stocks against the trend. We had a very similar case study on IBM where one of our members obviously taking a short position on IBM, and it's very much trading against the trend. You've got to wait until you get that confirmation. So there's a trade-off between having the best risk reward with no confirmation, or having a acceptable risk reward with confirmation. So the first scenario where you've got the best risk reward, you've got a low probability of success. But with the other scenario where you've got an acceptable risk reward, you've got a higher probability of success. And the reason is because right now, put options for IBM, I'm assuming put options for Palantir are incredibly cheap because it's almost at an all-time high. It's doing really well. There's a lot of sentiment to the upside. There's literally no red candles in the last 4 or 5 weeks. So you can look at put options and be like, okay, it's really cheap. Let me just take a hedge. Let me just short it with buying puts. But you'd be trading against the trend. There's no signs of weakness. There's no signs of confirmation that it's actually reversing trend. It's not breaking down below moving averages. There's literally no selling pressure. So you'd be taking a very good risk reward ratio, but combining it with a low probability of success trade. However, if you wait for things to turn, if you wait for some weakness, if you wait for breakdowns below those moving averages, yes, it's not the best risk reward because obviously you're not buying the put at the very top. You're waiting for some downside, for some weakness to come in. However, that probability of success goes up. So there's really a trade-off that you have to accept what is going to be the trade-off. And I would always pick a higher probability of success in terms of that trade over the best risk reward. We want to find that sweet spot where we're getting that confirmation, we're getting a higher probability of success while also having a very good risk reward ratio. So that's the sweet spot that you want to look for when you are, of course, trading options or trading in general, right? Even trading stocks, that's the sweet spot that you want to be looking for. Okay, so inflation numbers in 5 minutes. 5 minutes, folks. Make sure that you drop a like and subscribe to the channel. And also share this live stream with everyone so everyone can join us and we can take a look at the market's reaction live. We've got QQQs over here, SPY down here. We got NVIDIA and Tesla right about there. And we're going to split up this chart as well into the 10-year treasuries. We're going to put the dollar index right about there. We're going to put gold on the bottom right. Gold just over $2,600 per ounce. The dollar index is just under 103, and the 10-year treasuries are just a little bit over 4.08, so a little bit under 4.1% right now. So we are ready with the 5-minute candles on most important indices, S&P 500, NASDAQ, the US 10-year treasuries, the dollar index, and gold, and of course some individual stocks like NVIDIA and Tesla. So this is going to be over here. We're going to reload this page. In fact, I'm going to open it up in incognito just so I avoid that cache issue. And we're going to come over here, subjects, consumer price index, and we're going to reload this page. I'm going to open up that PDF right away to take a look at those numbers at 8:30 a.m. Eastern. So 3 more minutes left. 3 more minutes, everyone. And make sure that you are sharing this live stream, subscribing, and of course liking this video as well. David, thank you so much. That's the best comment. Thanks, Karthik. Your Patreon pays for itself from all the money I make from your alerts. Thank you so much. I really appreciate it. And, we've had people kind of talk about day trading and a lot of different types of ways of trading. I want to be very clear, like we are quality over quantity. That's been our motto from the beginning. Like we focus very much on quality trades as opposed to quantity. So I'm not going to be sending out trades every single day, but it's going to be more on a weekly basis. I send out most of my alerts on Fridays and Mondays, and it's always going to be quality setups over taking a lot of trades, because one of the things that I've realized over many years of doing this is you really are better off just trading less, but trading higher quality setups. And you'll see that in your own trading as well. If you're trading less, you're going to see better results versus if you're trading a lot. Because with trading a lot, you're making a lot of decisions, and that leads to decision fatigue. And then you're making worse decisions with every decision that you're making. So you're better off just kind of holding off your bandwidth to higher, better quality decisions, by trading less. So that is going to be the setup here. 2 more minutes, about 1:30 left, 90 seconds until inflation numbers come out here. So we're ready. This is it. This is what the markets are going to be waiting for. This is what the Federal Reserve is waiting for. QQQs right now are flat. S&P 500 is flat. We'll see what happens right at 8:30 a.m. Eastern for that report. Hope you all are ready. Drop a like, subscribe, and also share this live stream so we can take a look at markets reaction live with everybody. 1 minute left. 1 minute left. I'm going to end the poll here. 300 votes is what we're targeting. So 284 is where we're at. So make sure that you participate in the poll. right now. So mark quality and quantity isn't necessarily exclusive if the dog will hunt. Again, of course you can spend more time, but you can, there's only so many quality setups in the market, right? And that's what we end up taking. Sure, there's going to be more quality, but not every setup, not every trade is worth taking. And you're going to find more trades that are actually worth saying no to than they are saying yes to. So, there's definitely, they are, I would say, exclusive, because you can't find quality and quantity at the same time with every trade that you look at. So anyway, so numbers coming out in about 10 seconds here. Markets are ready. QQQs flat, S&P's flat, starting to move higher just a little bit. We're also going to be taking a look at gold, the dollar index, and of course the 10-year treasuries. And boom, here we go. Let's just reload this page, see if you can find those numbers. If you open up this PDF for, let's see if it's going to be for October, for September or not. There we go. We increased by 0.2% higher than what the expectations were. For core CPI, we actually moved back higher from 3.2 to 3.3. And for headline, we actually moved down to 2.4 for September. This, on a core basis, is not a good report. So on a core basis, just to repeat, we actually saw 0.2% increase on a headline basis, on a month-over-month basis for headline CPI, and core increased by 0.3%. This is actually higher than what analysts were expecting at 0.2. So not only did we increase on headline inflation month over month, we also increased on a core inflation month over month by 0.3%. And the worst case is that we are moving back higher on core inflation. This is not the best news on the inflation front because of that uptick, as you can see right there, from August to September, that uptick from 3.2, and the expectations were for us to stay at 3.2. Let me be very clear. The expectations were for us to stay at 3.2. Looks like we moved back higher to 3.3%. That was the number. And of course, we're looking at 2.4 on headline. Look at these drops in energy prices. Energy prices going down by over 15% on a year-over-year basis. Last month, down 4%, 4%, and 6% for fuel oil. That was expected. As I mentioned, the prices were down in September. If you take a look at crude oil prices, they were down about 7.5%, which obviously does reflect the gas prices over at the pump. And that's why we're down 4.1, and 6% in September. But the big gains essentially coming from food, 0.4% higher. Then we have energy services, electricity, utility going up 0.7%, 1.1% increase in apparel, transportation services up 1.4%, and shelter was up 0.2, which is actually good, but still up 4.9 on a year-over-year basis. So we've got all items less food and energy. So core inflation at 3.3, which is higher than 3.2. That's the previous number, and also higher than what the analysts were expecting. Headline at 2.4. So we actually missed on all four accounts. We missed on all four expectations of what inflation was going to be. So, markets are slightly lower, 21 basis points, 13 basis points. And if you really try to think about things now in a more logical fashion, you've got core inflation moving higher from 3.2 to 3.3%. Headline also increasing more than what the expectations were, although coming down from 2.5 to 2.4. I think that may have been the expectations here. Let me just quickly take a look. So CPI year over year 2.3. Okay, so expectations were 2.3. We ended up 2.4. So, consensus 0.1. We came in at 0.2. Headline year over year 2.3. We came in at 2.4. Core month over month 0.2%. We came in at 0.3. And ex food and energy year over year 3.2. We came in at 3.3. So we were basically we missed expectations on all four accounts. There you go. 0.2, 2.4, 0.3, and 3.3. So we came in 10 basis points higher on all four accounts here for inflation. I think the bigger number is going to be the core inflation, so ex food and energy on a year-over-year basis, coming in at 3.3%. I think that's really what's causing a little bit of this initial reaction, which the market's obviously coming down, and gold prices obviously spiking higher for the right reasons, because if inflation is moving back up, which I talked about this, that the 10-year treasuries may already be front running the Fed in that anticipation of higher potential inflation, because 50 basis point cut, what is that going to do to inflation? We already know that's going to stimulate the economy. It's going to create more borrowing, more cheap money in the economy. And of course, that's not always best for the economy. But we've got yields dropping back lower, dollar index absolutely getting crushed also, and gold prices are the only ones that are actually moving higher, 0.5%. Volatility, essentially flat, so no change on VIX. But we got QQQs down about 25 basis points right now, and SPY is also down about 18 to 20 basis points. So, digging a little bit deeper into this report, so further down, you can kind of break down exactly what the big change was August through September. Energy did its part, right? It was down 4-6%. That's a pretty significant decline, right? That's deflation, and that's good. That's exactly what we want to see. So if you come over to charts, this right here is the actual charts for inflation, and what you'll notice is a nice little drop from 2.45 to 2.4% from August to September. That's good. However, this is where markets are. This is what the markets are not liking. That is core inflation, right? So if you zoom in just a little bit, you'll notice that uptick from 3.2 to 3.3%, moving back higher, is what the markets do not like. And again, energy going into significant deflation here, down almost 7% on a year-over-year basis. So energy has really been doing its part. But if you come over to apparel, increasing, that big spike in apparel, as we saw, 1.1% month over month. Clothes, who's buying clothes? Apparel, 0.3 to 1.8% on a year-over-year basis. And shelter coming down, which is actually good to see, from 5.2 to 4.9%, because only up 0.2% month over month. And then finally, food is also stabilizing, pushing back higher just a little bit, from 2.1 to 2.3%. And one more thing which was up quite a bit was transportation services. Looks like we don't have transportation here, but new vehicle prices still in deflation. And let's see, yeah, we don't have transportation services over here, but we did increase on transportation by I think over 1.7% or something. It was something ridiculous. 1.4, yes, so 1.4% increase on transportation services, up over 8.5% on a year-over-year basis. So that's where we are with inflation coming in hotter than what the expectations were on all four accounts. Markets are starting to accelerate a little bit of that sell-off, because now if you really put things in perspective, you've got a labor market which is still pretty solid, right? And you've got inflation, arguably core inflation, moving back higher to 3.3, so coming in a little bit hotter, and also still above the Fed's target. So what does that lead us to? Like, I do think the markets are going to reprice a potential rate cut in November. I think there is a possibility that the markets, forego a Fed cut in November, just considering the hotter than expected inflation numbers. So if you come over to probabilities, these numbers will get updated, but going into this print, we still had an 18% probability for a rate pause, that the Federal Reserve is not going to do anything in November. 81% probability that they're still going to cut by 25 basis points. But after this inflation report, I'm going to assume that once these numbers get adjusted, that the market is going to be more inclined to a rate pause in November, that the Federal Reserve's maybe not going to do anything because of the fact that the economy continues to be very strong, and at the same time, inflation, headline is coming down, which is good. 2.4 is still a pretty solid number, but core is the problem. Core is really the big problem here for the Fed, is they're not able to lower the core CPI. And that's really what's causing a lot of this uncertainty around interest rates and whether we're going to see low rates or not. So I'm going to go over some of the comments. I'm going to end this poll. By the way, a lot of people were expecting above 3.2, and you guys were damn right. 37%, which was the majority of people expected that core inflation is going to come up above 3.2%. David, yes, let's look at NVIDIA wheeling again. I'm still with my covered calls. So once that covered call cycle is over, I will come back to CSPs on NVIDIA. That's really the stock that I want to trade a lot. Close all retail stores for a couple of months. Deflation, yes, deflation was seen only on energy prices. Energy is the only thing that actually came down. Big jumps in transportation services, apparel, and then let's see, we got 1.4 transportation services, less energy. Shelter was up 0.2%, so that's good, but electricity was up. If you really break down some more detailed items over here, and even food. I mean, food was up 0.4%. Annualized, that's, well over 40, and then 4.8, almost 5%. That's the number on an annualized basis. Then we had a big jump in meats, poultry, fish, and eggs, 0.8% increase, 0.9% for fruits and vegetables. And then if you scroll down further, we got apparel, 1.1. Let's look for some of the bigger items. Over here, 0.9% for physician services, 0.7% for medical care services month over month. Airline fares, look at that. Airline fares, 3.2%. That's part of the transportation services. And I was actually going to say, like, maybe jet fuel is still going up because of the increase in oil prices. And again, this is for the previous month anyway, but still a significant increase of 3.2%. Maybe, just maybe, they're not lowering prices. Not sure what's going on with airlines, but 3.2%. Or it also could be the tensions over in the Middle East, and this could be an anticipated hike for airline fares prior to already seeing the oil prices moving higher. But jet fuel, so that's part of airline fares. The biggest cost for airlines is the jet fuel, 3.2% higher. That's resulting in our transportation services going up 1.4%. Some other big items, you've got 1.2%, 1.9% for cakes, cupcakes, and cookies. Stop eating cookies, folks. It's not good for you. 2% increase for breakfast sausages and related products. So those are just the food. Eggs, oh my God. 8.4% increase month over month for eggs. Heck is going on? Eggs is like luxury. It's like luxury breakfast if you're having eggs. Let's scroll down a little bit further. 2% increase in roasted coffee. I'm fine with my instant coffee. Instant coffee is good. 3.3% for salad dressing. 2.8% butter. Let's come down. So these are the energy stuff that was down significantly. So we got 6%, 3%, 4%, 3%, 2% lower on a month over month basis. This is deflation. This is exactly what the Federal Reserve wants to see. That prices are coming down on a year-over-year basis, month over month basis. We're actually seeing prices decline, and then they're stabilizing at 2%. Everything else is an increase, but at a slower rate. So moving forward, 1.7% for furniture and bedding, 5.7% for cookware, tableware, 5.2% for jewelry and watches, 4.7% for jewelry. Scroll down a little bit. Again, this is just like the details of that report, but you're seeing a little bit of an accelerated sell-off. Nvidia is now down over 1%, back down to 131. And Tesla still managed to stay green, however, down to $242 right now at the moment. So, yeah, so that's where we are. Nescafe. I hear eggs are crazy expensive in the US. In Ireland, you can get 24 pack for medium eggs for about €3, $3.50. Wow, 2 dozen eggs for $3.50. That's incredible. Instant coffee is the devil's work. Nescafe is good. I like Nescafe. That's usually what I have in Dubai. Sometimes when I'm in rush, I'll just have instant coffee. Julia says I'm moving to Ireland. You'll lose egg savings on rent. Don't worry. Yeah, owner's equivalent rent, shelter prices continue to be playing a big role. And look, that's really not the things that are affecting core inflation. The things that I just went over, right? I mean, cookies, eggs, butter, croissants, like those are not the things that are affecting core inflation because they're already excluding for food and energy. And maybe if it was, obviously, we can see the headline inflation, it's coming down. So that's good. But when you exclude for food and energy, it's really shelter prices, transportation services. Like those are the things that are actually apparel prices. Those are the things that are actually moving core higher. It's apparel, transportation, shelter, sporting goods, things like that are the ones that are actually affecting core inflation. What the? 10.9% increase in prices for admission to sporting events. This is recreational services. Admission to sporting events, a 10.9% increase month over month. And that was the same, 10.9 and then 10.3% on a year-over-year basis. But this is ridiculous. What sporting events are hiking their prices by almost 11% in the US? What games are you guys going to? Tub of Nutella for $7 the other day. That's crazy. That's insane. Julia says, but according to Tom Lee, inflation is dropping like a rock. How is he going to spin this one? So, yeah, could be Taylor Swift. Not gonna lie. Even Taylor Swift and maybe even Coldplay. I've been trying to get Coldplay tickets for a very long time, and prices have just been insane. I got 2 in Abu Dhabi, but it's just ridiculous how high the prices are for these concerts. And I think they just launched the US tour, the North American tour. I think they're visiting California, maybe going to Toronto as well. And so, yeah, but that's not a sporting event. That's like more of a musical event. But sporting events, I'm sure, like NFL, NBA, I don't even know like what the ticket prices are because I've never been to an NBA or an NFL game. But yeah, 10.9% increase is a lot. Let's see if we can find a few more things to look at in more detail, but everything else is kind of okay. But those are some of the bigger items there. Motor vehicle repair, 2.8% month over month. 3.2% for airline fares. We've covered that. Public transportation, 2.4%. Transportation services, again, we've covered. Care of invalids and elderly at home, 1.2% increase. And 1.5% for services by other medical professionals. So yeah, that was pretty much the entire report. Coming in hotter on all 4 accounts. 3.3% for core, 2.4% for headline, and month over month coming in 0.2% and 0.3% respectively. And this is going to maybe, just maybe, reduce the possibility of a rate cut in November. Again, we'll find out once these numbers get updated. But right now, there's still an 88% probability that we're going to see another 25 basis points of rate cuts from the Fed. Player salaries are going up. Okay, so yes, that's where we are right now. We'll see if the markets get a bit of a rebound at the open because, so we've got inflation on one end. We've got the labor market on another end. Those are the dual mandates from the Fed. Interest rate expectations, of course, very important for the market, but another really big catalyst for the market is the money that's been sitting on the sidelines and the lack of risk appetite from the market. That differential has been coming down from 10% to 6% to now down to 4%, and technology is getting a lot of liquidity. It's getting a lot of inflows, especially in recent days. It's been getting a lot of money flow into that part of the market. Nvidia, Tesla, even Apple to some extent, Amazon. So a lot of these companies have been getting a lot of momentum higher, and they are now very close to leading this market. That's what we have lagged. That's why technology has been lagging for such a long time, and money market funds continue to sit at record levels of well over $6 trillion. Every single dip, every single small pullback has been bought up fairly quickly from investors. So we'll see if there's any buyers stepping in right at the open here. But volatility back above 21, and of course we do have gold prices moving up to 26.25. So there's a lot of momentum coming in for gold. Just take a look at after the inflation report, we saw a nice $13 per ounce or 0.5% increase in gold prices. We're still off from all-time highs. All-time high sits well over 26.80, but it's kind of interesting to see how impressive that move is to the upside for gold prices. And of course, dollar index is dropping. 10-year yields are dropping. Investors moving a little bit back into bonds. And of course, equity markets also under a little bit of pressure there. Vic Flesh says, Tom Lee is like a day one financial advisor, freshly qualified. Just put money in. It'll eventually grow. May not be by 2026, but it'll grow. I can advise that without being a qualified FA. Yes, so obviously, we've talked about this before, that if you are looking at long-term stats for the market and And if you are investing consistently over the long term, you're going to make money in the markets. In fact, take any 15-year rolling period. This is a stat that I talk about almost all the time during our live streams and videos as well. Any 15-year period in the market, the probability for a loss was 0%. 100% of the times in any 15-year rolling period, you ended up making money. Doesn't matter. You take 200 years, blindfold yourself, take a dart, throw the dart, whatever year it lands on, you invest in that year, and you wait 15 years, you're going to be up 15 years later. It doesn't matter, right? In those 15 years, we could have gone through wars, pandemics, depressions, recessions, bear markets, crashes, whatever. 15 years later, you were higher. So when you know that, right, that over the long term, markets tend to perform really well, and there's a probability the markets are going to be higher 75% of the times there's an uptrend in play, then it almost always makes sense to be net bullish most of the times, optimistic about the markets over the long term. However, there's definitely some caveats to that type of analysis, because being bearish and being bullish almost all the time can be very harmful. Of course, being bullish has worked out, but that doesn't mean it's going to continue to work out just because it's worked out in the past, right? So that's kind of a very interesting concept in the market, is that just because it's worked out in the last 200 years doesn't mean it's going to continue to work out in the next 200 years. What really matters is growth, right? We want to see economic growth. We want to see earnings growth. So for me, the US markets are the most optimistic I'm in, the most bullish I'm in for those markets, as long as earnings continue to grow, as long as there's global domination, as long as there's adaptation to new technological advancements. So that's where the thesis comes in, right? As long as earnings are growing, right, there's a reason to be bullish about the markets, because at the end of the day, the S&P 500 is nothing but a multiple of earnings. Whatever you see the S&P 500 quoted at, 5,700, 5,800, 6,000, 10,000, 5,000, whatever, it's just a multiple of earnings at the end of the day. It's really just taking into account the earnings per share for the aggregate 500 largest companies in the US, applying a multiple, and boom, you've got your S&P 500 index. So as long as the denominator, as long as the baseline earnings grow, you can expect the markets to grow over the long term. So, but ignoring that fact can really put you in a very troubled situation, because if earnings don't grow, and in recessions earnings indeed don't grow, they decline, then of course you can find ourselves in a bit of a situation where the markets are selling off. So there's short-term tactical approach that you can apply with potential hedging or increasing your cash exposure. That's what I do. I never exit the market completely just because I anticipate, okay, markets are overbought or overvalued, or if there's a recession on the horizon, I'm not going to make selling decisions based on that type of analysis. My decisions are going to be focused more on earnings. If earnings continue to grow, and what's my time horizon, right? I'm not planning on retiring, in the next couple of years, so I can weather through that storm. I can weather through that sell-off and continue to take advantage, buy that fear, buy that panic, if the market gives me the opportunity. But if you're someone approaching retirement and you feel the markets are in a little bit of an uncertain place, then your overall strategy should itself be a little bit more defensive, right? You don't need to take significant amount of risk to meet your retirement goals. As you age and as you are getting closer to retirement, then you're kind of moving away from those high risk assets or equities in general, moving a little bit more towards safety and more defensive. So that's yes, the CPI report is out, everybody. We got the inflation report coming in a little bit hotter than what the expectations were. 0.2% month over month for headline, 2.4% for year over year. And the big number was the core CPI, 0.3% month over month, and year over year coming in at 3.3%. So that's where we are. Yes, make sure that you drop a like, everyone. I would really appreciate that. And also share this live stream with everybody else so we can have a more lively discussion. And yes, gambler's fallacy. So I think it's really important to be objective in your understanding of on earnings. And that's why, like, a couple of days ago when I'm talking about getting cash ready and having cash exposure so that you can take advantage and the market goes up, of course, people are going to think that, oh, I made a prediction, the markets are going to come down. And now I'm kind of accustomed to kind of tuning out those types of comments, because I understand that how markets work and the type of philosophy that people can operate under, right? It's almost always like if you're listening to somebody, you need a prediction. You want to hear a prediction. What is going to be, XYZ stock next week or next month or next year? Where's going to be the market next week or next year? Have you ever wondered why in all the interviews from Warren Buffett or Peter Lynch or Howard Marks, they never talk about where the market or a specific stock is going to be? Never. They never talk about if they've got a price target. They've never talked about if they believe the S&P is going to be at this level or at that level, because they know that it's a loser's game. You just cannot make predictions and be right at the same time consistently. You could be right once, twice, 3 times, but consistently you just can never do it. So it's almost always a waste of time if you're trying to make predictions or listen to someone make predictions, because it's just not going to work out long term. And so that's why they focus more on the present. They focus more on buying undervalued companies or even indices or index funds and ETFs, and just playing the long game and understanding when the risk reward is much better versus when it's not. So that's really what we're here for, right? To identify opportunities, and when the risk reward is in our favor, take advantage. When it's not, hold off. That's it, right? Not putting up predictions or price targets that, yes, the markets are going to be green today. They're going to be up 0.5%. S&P is going to hit 6,000 by the end of this year. If it does, great. If it doesn't, who cares? More opportunity for us to DCA. Okay, I'm going to go through some comments here. So time for TLD TMF. We'll take a look at that here. So that's a good question, because, if the Federal Reserve starts to focus more on, a potential rate pause, and the 10-year Treasuries is already where it is right now, because it has moved higher, right? It has moved up quite a bit from its lows of 3.5%. So we're back up over 4.1%. Then there is possibility for us to maybe DCA a little bit into TLT and TMF again. So I'll talk about that maybe in another video and discuss that in our Discord as well. But 85% probability still the Federal Reserve is going to be cutting rates. However, we are coming off on the possibilities of rate cuts in 2025. So 2025, we were expecting 4. Now we're only expecting 3. So markets are pricing in that we're going to end the year at 4.25 and 4.5%. And then by the end of next year, we're going to only come down to 3.5 and 3.75%. So that's only really 3 rate cuts the markets are pricing in right now. So JC says, yes, the CPI was not hot. It was warm, only missed by a touch, and it's offset by a hot jobless claims print at 8:30 this AM. 360 claims versus 330. Yes. So that, of course, is also a pretty significant print, I would say. Actually, we are at 258,000 JC. So 258 versus 226 for jobless claims number. So that also is, again, way below expectations. But yes, I mean, it's not super hot. It's not like we're coming in at insanely high inflation numbers. But the only thing that concerns me a little bit is the fact that core is ticking back up. So we're moving back higher from 3.2 to 3.3. And headline, we increased more on a month-over-month basis. So if you reset this, you'll notice that we're a little bit more stable at 3.2, 3.3. Like there's no movement, accelerated movement lower to 2%. And, we know what's happened in the past as the Federal Reserve decided to lower interest rates in the 1970s to try to control the economy. They have let inflation surge back higher. And as I've said before, it's a lot easier for the Federal Reserve to fight a recession than it is to fight inflation. That's why the risk of cutting too early is greater than the risk of cutting too late. I've said this many times over, and with the simple understanding that rate cuts can happen faster and more aggressively, but rate hikes can't happen faster and more aggressively. So rate hikes need to be done slowly. They need to be done, in a very, very periodic fashion where the economy can get accustomed to those higher rates. But when it comes to rate cuts, they can do them a lot more aggressively in order to support the economy. So yeah, that's where we are. And If inflation starts to reaccelerate back up, then yes, that's going to be a bit of an issue for the market here. So Ash, yes, Wigglefish kind of gives a good answer that if you're trading, then it makes sense why you would want to lock in some profits because of the fact that it's very overbought. You know, it's coming up to its higher range resistance. But if you're really playing the long game, then it's not a buying opportunity, but it's certainly not a selling opportunity either, because of the fact that there may still be a lot of upside over the long term, right? It's only really $100 billion company right now. And Palantir, if there's any one company that has a potential to, be a 10 bagger over the long term, Palantir is one of them, because it's fully indulged in artificial intelligence, data science, data analytics, making companies more efficient, saving costs, increasing revenue. So a lot of the things that businesses want, Palantir can provide. So, if there's one company that I believe that over the next 10 years, say maybe longer, has the potential to reach the $1 trillion mark, Palantir is one. But it's also a B2B business, right? It's also a company that caters mostly to businesses and governments. So that's that constant pressure of winning higher quality, higher contract values in order to grow their revenues and earnings. But so far they've done really well. And again, $100 billion is no joke. It's a pretty big company now. So it depends on the time frame, right? Depends on the time horizon for that company. And it also really depends on your percentage allocation, right? So if you bought the stock at $10 or whatever, $20, and it's more than doubled or tripled from when you bought it, and now the portfolio, Palantir makes up a majority of your portfolio. Let's say originally it was 10% and now it makes up for 20 or 30 or 40%. Then you really have to decide and make a judgment call where, are you comfortable with 40% of your portfolio in one stock like Palantir, which can be volatile, or if you are not comfortable with that, right? So if you're not comfortable, then yes, it makes sense to maybe rebalance a little bit, play with the house's money, take your initial investment out, whatever works for you. Or if you're comfortable, then of course, just do nothing, enjoy the ride. Okay, so markets are starting to roll over, down about 40 basis points for the Qs, and the SPY is down about 30 right now, and we got Nvidia down about 80 basis points. Tesla's still green, still managed to be up green here pre-market. Folks, do me a favor and subscribe if you haven't already. Still 30 to 35% of the viewers are not subscribed, so I would really appreciate you guys hitting the subscribe button if you're enjoying the live stream. We cover fundamental analysis, technical analysis, macros, long-term investing, options trading, and swing trading, everything about stocks and economy over in the US. So if you're interested in that content, definitely drop a like and subscribe if you haven't already. I would really appreciate that. Greatly helps out the channel, and also helps us grow, get more people involved. If you trim, you lose out on the 10 bagger. Yes, so that's also a good point, and something every investor has to evaluate for themselves. But $10 cost basis is insane. It's really good, and you have 4x'd, almost 5x'd your investment. So I'm assuming your allocation's really high on Palantir. Okay, what else? Volatility is back above 21. Crude oil prices back above 74. Gold is sitting just over 2,600. 10-year treasuries back down to 4.06. The dollar index still selling off after the inflation numbers. Who's ready for the big Tesla 1010 event, robotaxi event? Who's ready for it? Who is ready for the big Tesla robotaxi event? Based on FSD videos by Tesla FSD beta drivers, there is still quite a lot of stuff to do before it becomes possible. Yes, I mean, it's going to be, expectations are high. I feel like it's very, very high expectations for Tesla. And just for that reason alone, I'm not super confident if Tesla is going to be able to rally post-event, because investors have really hyped up this event to a point where it's like expectations are to a point where this is going to be this magical day where everything changes for Tesla. It could. I'm not saying that it can't, but when expectations are so high, be careful. Be careful because it's oftentimes very difficult for companies to meet those expectations. Nvidia went through something very similar where in the prior earnings, the expectations were so high, even though they reported some blockbuster numbers, just because it wasn't on par with those sky high expectations, they dropped quite a bit post earnings, and then continued to sell off, right? There was a lot of selling pressure down to low 100s. And then of course now they're back up to almost all-time highs. But yes, there is a lot on the line for Tesla. Mark says, past my bedtime on the East Coast, man. Gotta make an exception here for today. If you are a Tesla investor or shareholder, of course. If you're not, then I would not compromise on the sleep. Sleep's very important. I keep telling my girlfriend this. That sleep is incredibly important. Getting 8 hours. If you're not getting 8 hours, you're just not going to be able to think right, function right. And especially when you're trading, investing in the markets, there's so much decision making. If you're not getting proper sleep, you're not going to be able to be very rational in your decision making. So I'm ready for the big disappointment. It says, yes, Tesla almost always red after the event, Dixon says, and I couldn't agree with you more. That's what's happened in Battery Day, Optimus, robotics, everything. Tesla has struggled in the past. Yes, indestructible Cybertruck window debut. Tesla, so the higher end would be around 295 and the lower end would be 220s. So if you do the technicals on Tesla, what I have here is still trading well within the context of an uptrend, right? So we've got the higher highs and higher lows here. And I've got the 4 levels that I'm watching for Tesla post-event. The first one is going to be right there at 250. So 250 is a level more recently that Tesla struggled to break out of. So that's going to be that first area of resistance. Here, let me just put a price call right there. So 250 is going to be that first level. And that's really only about a 3.4% upside to 3.6% downside. So we got a shorter range and then we've got a broader range. So the shorter range is going to be 250 down to as low as 235. Okay. So that's the support. That's more on the 3.5% lower, and 3.5% higher is going to be 250. Then a wider range is going to be up to 270. Call it 270 right there, because, or 265, 270. You get the idea, right? So that's pretty much the upper range. And then support level below that's going to be down here at 225. So those are the 4 levels that I'm watching. Now, 3.5% either way seems a bit less for such a big day. So this would be the first consolidated zone, and the second one would be the broader, wider zone here for Tesla. And again, this is a binary event. Hard to say which way Tesla's going to break out to, but knowing Tesla's history and knowing how overly hyped this event is, I'm not keeping my expectations higher. In fact, they're very, very low right now going into this event. Yeah, so it can bump up, bump down. Elon is going to be tweeting for sure. What will be the best puts, the shorts to attack this week? So Edgar, I already posted some trades on CELH. So Celsius was a potential idea. Now up almost 7%. I'm starting to feel a lot of FOMO because I could have taken that cash good put trade yesterday, but now I can't because it's already moved up quite a bit. But it's okay. Like, my cash hadn't cleared yet. And the other trade, of course, is on Tesla itself with the covered calls at 260 expiring this Friday. And I think that contract's going to be up like close to 60% today. So we'll keep a close eye on that as well. And then, of course, reload for next week with some more calls because Tesla's earnings are also coming up. Yeah, so good updates from Robotaxi, FSD, the Cybercab, and a cheaper vehicle. I think that could push the stock higher. That could actually create some more momentum and some more upside. But it's gonna be interesting. I'll be live in about 12 hours. So after this live stream, I'm gonna take a bit of a nap. Then I'm gonna do the market update. India time zone is really horrible for me, unfortunately, because that's why I want to get out of here before earnings season starts, so that I can actually stream earnings and listen to the earnings calls. Because and of course the time difference after November 2nd, the daylight savings, which I think ends on November 4th this year, November 3rd. It's going to push Dubai and India an hour further. So now markets, instead of midnight, they're going to close at 1 in the morning in Dubai, and at 1:30 instead of 1:30, they're going to close at 2:30 in the morning here. So definitely don't want to be here when that happens. It's going to be brutal. Anyway, so AJ, what percentage of your portfolio are you putting down towards Tesla's event? So it's not really a bet that I'm making. There's no binary trade. It's really just I have 100 shares in the options portfolio in Tesla that I picked up for the buy ride. I sold calls last week that I closed for a nice profit, and then I closed then I opened new calls for this Friday that are currently up 60%. I'll be closing those out after today's event, and of course tomorrow's price action. And then we'll be again continuing to sell more calls, because that's part of the wheel strategy in the options portfolio. So that's what we're going to be focusing on. So again, thank you so much, everyone, for joining. I would really appreciate you guys dropping a like and of course subscribing to the channel if you haven't already, and do check out the links below if you are interested in joining us in our MoneyVest community. So this is going to be the link if you are interested in joining our Discord, getting access to the entire MoneyVest platform, where you can track earnings calendar, economic calendar, and of course a lot of other really cool things. So for example, we already have the numbers updated on our website as well. 0.3% core CPI month over month, inflation rate 2.4%, month over month 0.2%, and core year over year sitting at 3.3%, which of course was higher than what the expectations were. These are all high impact items on the market. And of course tomorrow we've got PPI numbers coming out. You can also take a look at market concentration, build your own indexes, also analyze individual stocks, do a full company overview, use our calculators under Analyzer tab, discounted cash flows, discounted earnings, net liquidation value, case analysis, bear case, base case, bull case. You can pretty much plug in your own values to figure out what's the intrinsic value for any stock that you're choosing to invest in for the long term. Do your full fundamental analysis as well as macro dashboard with a lot of really insightful items to look at. So thank you so much for joining. Link's going to be down below, and also in the chat if you want to join, be a part of our MoneyVest Discord and our Patreon with members only videos and options portfolio updates and trade alerts